All right, today we're breaking down the story behind a massive, really system-shaking move in the silver market. This is all according to a prominent community of precious metals investors. We're going to get into the arguments, the data, and the predictions that are driving what might be one of the most explosive commodity stories we've seen in years.
So, it all boils down to this one number. According to our source, on December 9th, 2025, silver shot up and hit an intraday high of $61.44. Now, this wasn't just some random tick on a chart. For a very dedicated corner of the financial world, this number, well, it was a moment of pure, absolute vindication.
And that's exactly how the source described the feeling of that moment. You know, not a gentle knock, not a polite little entry, but a powerful, undeniable force just kicking the door down. This quote really captures the sheer intensity of the event for people who believed this day was coming for a long, long time.
Okay, let's really dive into this. We're going to start by looking at what exactly happened on that pivotal day and, more importantly, why it's being seen as so much more than just another price increase.
The source material paints this as a truly seismic event. I mean, a 5% surge in a single day is just massive for a major commodity. And breaking through that $60 mark wasn't just about a number. It was a huge psychological barrier being absolutely shattered. For this community, it was a statement of intent. It was a signal that the market was done accepting the old valuation, marking what they see as a genuine historical turning point for silver.
Now, what's really fascinating is the why behind this move, at least according to the source. They argue this isn't just some random spike. Nope. It's the climax of a deep, structural conflict that's been simmering under the surface for decades.
And this slide just illustrates that central argument perfectly. It's like a tale of two markets. On one side, you have what the source calls paper promises, this idea of price suppression through huge short positions and a narrative that always just dismissed silver as the poor man's gold. But on the other side, you have the undeniable physical reality, relentless industrial demand from things like EVs and solar, exploding supply deficits, and critically low inventories in the actual physical vaults. The argument is simple. Physical reality is finally winning the fight.
So, on top of all these underlying fundamentals, the source points to one single powerful catalyst, the signal from the Federal Reserve that rate cuts were coming. And this wasn't just a small spark. In their words, it was like dumping a tanker truck of gasoline on an already raging inferno. It just supercharged the immense pressure building between the paper markets and the real-world physical scarcity. And look, this wasn't just some niche view held by a few people. The source brings together a whole series of, frankly, euphoric reactions from well-known figures in the precious metals world who saw this as the ultimate validation of their entire thesis.
Analyst Peter Schiff is quoted making a really fascinating point here. He notes that over the last 4 years, Bitcoin, the asset that's often called the ultimate hedge, is actually down 50% against physical silver. His whole argument is that the market is going through this profound reevaluation of what a true safe haven is versus what's just pure speculation.
Then you have Gary Savage of Smart Money Tracker, who has a much more combative take. He argues that the big players who allegedly held silver's price down for years are now totally trapped in a massive short squeeze. Basically, they bet the price would go down, and now that it's soaring, they're forced to buy back at a huge loss. He claims this isn't just a bad trade for them. It's costing them billions, and their long-standing control over the market is now completely shattered.
And right here, Peter Schiff from GoldSeek points to what he sees as a massive opportunity. He's talking about a glaring inefficiency in the market. While silver itself has soared, the mining stocks have lagged way, way behind. He calls them a screaming buy, basically suggesting that the next wave of money is going to flow into these undervalued companies which could offer some seriously leveraged returns.
So with all that context, the big question becomes, where does the price go from here? The source doesn't just, take a victory lap. It immediately pivots to laying out a data-driven roadmap for where silver could be headed next.
First off, a quick definition of a key term you hear a lot in this space, the gold-to-silver ratio. All it does is measure how many ounces of silver it takes to buy 1 ounce of gold. So when this ratio falls, it means silver is gaining on gold. It's outperforming. And the source says it just hit a critically low level of 69, which from their perspective is a very, very bullish signal.
This chart from the source just visualizes that outperformance in the starkest terms possible. Year to date, silver isn't just rising, it's up 100%. That's more than double gold's already impressive 40% rally. So this isn't silver just kind of keeping pace. This is silver leading the charge with some absolutely explosive leverage.
The source also really emphasizes the incredible speed of this most recent move up. It took just 12 days to jump $10, from 50 to 60. And the implication there is pretty clear. With all this momentum building and a little bit of FOMO, fear of missing out, kicking in, the next $10 jump could happen even faster.
And here's a summary of the price targets being thrown around. They see this clear, sequential path upwards, an immediate target of $63, and then a technical bull flag target of $72. That's just a chart pattern that suggests to analysts a strong upward trend is probably going to continue. And from there, they see a whole new trading range forming between $80 and $100, with some even predicting triple-digit silver within a year.
Now, to put all of this into perspective, the SRS Rocker Report draws this really fascinating historical parallel. Back in 1980, 1 ounce of silver could buy you 1 barrel of oil. Simple enough, right? Well, if that same purchasing power relationship were to hold true today, silver would need to be at $93 an ounce. The argument is that even after this huge run, silver is still historically undervalued.
Okay, so let's zoom out to the biggest idea in this entire analysis, because this isn't just about one commodity. The source argues that this price move is a signal of a much deeper, more fundamental shift happening in the entire financial system.
The source argues you just can't view this event in isolation. It's happening against the backdrop of a staggering $38 trillion in U.S. national debt. They believe this is the environment that's driving a profound psychological shift away from assets that are based on debt and toward tangible physical things you can actually hold.
And they present all this evidence to show the idea is going mainstream. Key analyst posts are just exploding online. The bears, the critics, have apparently gone totally silent. And now you have major financial news outlets like Bloomberg and Reuters who are actually corroborating the core arguments about Fed policy and supply shortages that this community has been yelling about for years.
And that brings us to the source's grandest claim of all. This isn't just a bull market for silver, it's the beginning of a completely new era, a commodity renaissance, where the market's very perception of value is being redefined right before our eyes.
And this quote just perfectly captures that core message. The surge to $61 wasn't just another data point. From this perspective, it was a signal that the market is losing faith in currencies and is shifting its focus back to hard assets that have real intrinsic value.
So, the crucial point is this. The source presents the huge surge in silver not as the end of the story, but as the opening act of a much, much larger trend. It really poses the question of whether we are at the very beginning of a broad, system-wide return to commodities and physical assets.
So to sum it all up, the narrative presented here really rests on 3 key pillars. First, there's this deep psychological shift from paper to physical. Second, silver's unique dual role as both an absolutely essential industrial metal and a timeless monetary asset. And finally, you have this powerful alignment of market fundamentals, technical chart patterns, and a unanimous chorus of expert voices, all pointing in one single direction, up.